Hello, it is the 12th of April 2011. This is the second Silverlog video for today. And the numbers on the right hand side, very difficult to read maybe, but the bottom one says 38, 39, 40, 41, 42. In order to put the moving averages and Fibonacci lines on a candlestick chart, the only way I know how to do it is to make two different charts and match one up with the other. So that's pretty much what I've been doing within here. Now, as far as some trendline analysis is concerned, the original trend line that brought this market lower took a decent amount of time to break towards the upside, and it's a little concerning that this is a breakout trap, because when you break a trend line, you either have one of three things to occur, one of which is a reversal, and the reversal from going down is up, which is not happening, so that doesn't look as of now to be the case. Another one is that it just may change the rate of descent or maybe correct through time. It's still possible. And the more scary one is that it re-enters the range and keeps going lower. Therefore, if it breaks the support line lower, yeah, we're heading down to here. Now, it is a pretty steep trend line. It's not going to last for a decent amount of time, but we'll see. As far as previous resistance, 39.75 was pretty big. We can see how resistance has thus become support. If we take what the trend line used to be, adjust it towards in here, that's maybe the best one that we have right now. That would be that of a descending triangle. And within the descending triangle, if you break this support level, which is pretty big, you've had 3 tests of this level now. The more often you test it, the more likely you break it. You're heading down here. And of course, a breakout towards the upside, you got to get above these key moving averages, and then above this previous resistance here at roughly 40.80 or so, 40.90, even above 41, to start to reverse the trend. If we move this off to the same amount of, or the same amount of hourly chart, just more candles, going back to the 1st of March, draw some trend lines in place. When they're that aggressive, they don't hold. This trend line is still active. We've broken below it, but we haven't confirmed any break yet below this trend line. And if we do, then you just move this trend line until, of course, it becomes a downtrend line. And that's if it goes this low. I don't think it will. I'm thinking approximately 35.50 to be a significant level of support if we really happen to break down just a little bit. Finally, the monthly chart. This move has done nothing to damage the trend. The trend is still doing very magnificent. Is it overextended? A little bit, because we had a correction in here, and the gains are still, we still could have massive explosive gains really at any time because of the way that the trend has been moving. And to me, I don't believe that there's no such thing as up too much. Now, as far as some trend lines are concerned on this, as far as this one, let's just draw a parallel line here. We've had a nice breakout above this level. We were supposed to find resistance at this level, and we did. We did, because we had this red candle. But it really wasn't the greatest of resistance. And what the psychology tells me is when you're at an area where you're supposed to have resistance and you really don't have much, then that's super strength overall. We continue on with some more trend lines. This one isn't even a concern right now for a test as of yet. And same sort of deal here. We find support at this level. If we take the exact same rate, all the properties the same, what we'll do is I'll copy this and we'll find out where the next resistance line is supposed to roughly come towards. Draw a straight line, and we'll get one of those ta-da sort of deals. We're supposed to have resistance, and we'll see. We'll see.